Hey, this is Matt from InvestiQuant. Today is Friday, January 14, 2022. Yesterday, the markets were weak. We ended up with kind of a trend day down. We opened up right near the highs of the session. And after a quiet, first 15 minutes or so, we took off to the downside and continued lower pretty much the entire session, finishing at the lows of the session. It was a sizable down day, and the overnight session is fairly quiet. We're getting some consolidation taking place. We're trading right around where we closed yesterday. And we're going to be looking at what has happened following a big move like that going into the end of the week. So let me get this set up. I've got all four instruments selected here. The setup's based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time. Now, currently, we are trading right around yesterday's closing price. So I have no idea if we're going to gap up or down. So what I'll do here is just use a gap size as a percentage of the 5-day ATR, which will allow this to look at up gaps and down gaps as long as they fall within this gap size. And the gap size I'm going to use is 20% of the 5-day ATR. So let me type that in here. For the S&P, just for reference, the S&P 5-day ATR is 71.5 points right now. So 20% of that's about 14 points today in either direction that this would be considering 20% for the test. All right, the next thing I want to do is go down to the price patterns. I'm going to say yesterday was a sizable down day. The way I'm going to do that is I'm going to click on this. It closed more than 1% lower on the session. So I've grabbed that from the active today. It comes from the direction of the last close right here. Next thing I'm going to do, indicators. I'm going to say we finished below a 10 and above a 200-day simple moving average. And then the last thing I'm going to do is I'm going to say that happened on a Thursday, which means today would be Friday. I'm going to hit equals here next to Friday. We're going to be looking at what has happened historically on Fridays following this pattern. So let me go ahead and click view results. All right, here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time, when it is a Friday and the prior day had a close that was at least 1% lower than its prior session. This is taking place below a 10 and above a 200-day simple moving average. And then on that Friday, you get a very small gap, which I've defined as less than 20% of the 5-day ATR away from the prior day close. So a fairly flat open. All right, historically, we've got 27 samples in the S&P, 46 in the NASDAQ, 23 in the Dow, 36 in the Russell. The win rates on these are skewed a little bit towards the downside, with the S&P coming in at 37% of these have closed above the open for that day. The NASDAQ, it's 48%. The Dow, like the S&P, 39%, and the Russell, 47%. So all of these are under 50%. If we look at the average moves, the average loss just a touch larger than the average win for the S&P. They're fairly close in size. The NASDAQ, the average loss is larger as well. That is also the case for the Dow and for the Russell. So all four of these have had larger average moves to the downside, and all of them have finished below the open more often than above the open. So historically, it has led to lower prices more often than not, and the moves have been bigger to the downside compared to the moves to the upside. Hopefully you found that helpful. Good luck today. We'll see you next time.